Well, I think we're ready to go here. Okay. Good morning, everybody. Welcome to IBD Live. Today is Thursday, January 16th, 2020. I'm David Saito Chung, Deputy Markets Editor at IBD. Welcome to our show once again. We're very thrilled that you've joined us in, I guess, the third month since we started in November. Our mission is twofold. One is to help you learn about excellent chart analysis, how to analyze fundamentals, and understand the importance of market direction, and really get a grip on how to find out about quality and institutional sponsorship, and in doing so, earn a lot more money in the stock market. We've got a great crew here again, as always. Ed Carson, our news editor, back from a little mini vacay. Welcome back, Ed.
Welcome.
Ken Shreve, fellow senior markets writer and senior editor Leaderboard. Good morning, Ken.
Morning.
And our research director, Justin Nielsen, right behind me. Good morning to you. A couple housekeeping items. We'll just cut to the chase. As you know, our legal team is always watching our show and very interested in what we say and what we do, and making sure that we make it clear that all of the content in this show is for informational, educational purposes only. No stock should be taken as an outright recommendation. Please do your own research or consult with a financial advisor before making any decisions. We're glad to hear that you're enjoying the summaries of the Q&A that we send out every day. Ed and I, the customer success team and marketing, are working very hard to make sure everyone gets those daily recap emails that include a link to the watch list, to the ready list that Mike Webster and Justin have been working very hard to update. Kudos to both of those guys. It's really hard work, and that's why it takes a little time for that email to get constructed. But also, as you know, in that email, you get a link to the video. If you still have issues in not getting them, first off, we've heard from customer success that some of you are using multiple email addresses. You have alternate emails that might be blocked, and the one that you don't want to be blocked. So you want to contact the customer success team. You must do it in writing to make sure that none of your relevant email addresses are blocked by any investors.com emails, and that includes the email addressee I think it's investors.com at em.investors.com or IB. There we go. Okay, thank you very much. So we have a few minutes before the market open at 6:30. Looks like futures are up. Justin, what do you have in your eyes right now?
You know what? There's a lot of chips that they didn't have such a great day yesterday, but AMAT, Applied Materials, AMAT, that looks like it's setting up to me.
Great, thank you, Ken.
Yeah, looking at futures up 0.5%, so a nice strong open taking shape. I want to take a look at a couple stocks. First of all, let's take a look at NVIDIA, which is still holding nicely above a recent 3 weeks tight entry. This stock, actually positive comments earlier this week from Craig Hallam and Argus, buy ratings, 300 price targets. Today, Piper Sandler maintains an overweight rating and lifts its price target to 275. So this one still looks to be in range from a 3 weeks tight entry. Stock's up about 1% in pre-market trading. I got to keep in mind that this 3 weeks tight pattern formed after a 30% move from a buy point and prior support at the 10-week moving average. And also want to take a look at Match Group, MTCH, a big cap 20 stock forming the right side of a base. Several up weeks in a row. Another candidate for possibly a handle forming here, but looking pretty good.
Thank you very much, Ken and Justin. And Ed, please take it away with the news.
All right. Well, we had a fair amount of economic news today. Retail sales came in a little bit light, but were higher than expected, excluding autos, up 0.7%. The Philly Fed Manufacturing Index went up sharply, up to 17, well above estimates. It was up from 2.4 in December. Jobless claims also fell. At 10 o'clock Eastern, we will get the housing market index, or the home builder confidence feeling there. Taiwan Semiconductor, actually the biggest chip maker, I believe, pure play chip maker by market cap. They had mixed earnings, stronger than expected earnings, but their Q1 guidance was very strong. They were very bullish on 5G smartphones. So Taiwan Semi is up, but you're also seeing things like AMD, obviously NVIDIA. There's news on NVIDIA as well, but Apple, Qualcomm, Broadcom, chips in general are up a little bit. Also, they were down a fair amount yesterday. Morgan Stanley, they beat earnings and revenue easily. Stock is up like 6%, which is, given that this is after a number of other banks had already given news. So this was a really strong move. It was around a 20-month high yesterday, so I'm not sure what it'll be. So that was nice news. Tesla, a couple pieces of news. Morgan Stanley's Adam Jonas, they downgraded the stock to underweight. Did hike the price target by 44% to 360, still well below where Tesla is right now. Just thought that the momentum wasn't going to continue, at least not for now. Also, California registrations plunged 46.5% in Q4. This is sort of like in Spinal Tap, where they said, don't worry, Boston's not a big college town. California is a big, big, big state for Tesla. It may show the power. Now, I've seen some evidence that maybe the registrations are actually lead deliveries, so maybe it wouldn't capture a rush to in December, but it would still be comparable to a year ago, because that also didn't capture it a year ago. And we may not get that rush in December because the subsidy, which was expiring, was $1,875 and it's now zero. But a year ago at this time, it went from $7,500 to $3,750. So a bigger drop back then. Anyway, Tesla's down 5% after a drop yesterday. Still looks like it's going to be above its 10-day line. So, I mean, it's not exactly terrible days for Tesla bulls. Bank of New York Mellon, they missed on revenue. Stock is down sharply. Schwab just missed on earnings as it enters the zero fee world. Stock was down a little bit. XPO Logistics, logistics firm, they are mulling a strategic review, may sell one or more business units. That stock is up like 18% before the open. Now a lot of other positive chip news. Mizu raised price targets on Micron and Western Digital, downgraded Xilinx to neutral and cut its price target on that stock. Argus raised its price target on Lam Research to 340. Luckin Coffee price target hike raised to 56 from 32 at KeyBank.
Wow, that is big. That is very big.
Yeah, Wells Fargo raised its price targets on Microsoft, Salesforce, Adobe, ServiceNow, and Autodesk. That's MSFT, CRM, ADBE, NOW, and ADSK. Luckin Coffee is LK, as many are aware. PPG, big paints and coatings maker, had been doing reasonably well, but it missed on earnings and its guidance was weak. Wingstop, which is trying to build the right side of a base, it reported strong same-store sales. Stock was up a little bit. Signet Jewelers, ticker SIG, stock has really been down for a long time. It's been trying to come back up. But that stock is up 31% today. So obviously it had a Merry Christmas. Somebody went to the mall this time. So tonight we're going to have CSX, the first big rail operator, and Kansas City Southern, which I think has been leading the group in recent months. That one has earnings on Friday. Tonight we're going to get China economic data, including Q4 GDP data for the first time. So that'll be interesting. And I'll turn it back over to you, David.
Thanks so much, Ed. And also, I would be remiss if I didn't mention that our good friend, Chief Content Officer Chris Kessel, sitting right next to me, is going to do the dark ops today. He's already pounding away at various answers. I'm trying to help him as well. And Mike Webster, our Chief Market Strategist, might also chime in with a comment or two. I sincerely hope he doesn't use the cowbell early this morning, as he sometimes does when he alerts the entire newsroom that a story has been published and needs to go on the homepage. Also, I want to make a small little point. I guess there we go.
Oh,
there was a cowbell. Okay, that was not the market open bell, by the way.
Right, exactly. Pretty close.
Pretty close.
Yeah.
A little premature.
We have a minute before the market open. I just wanted to point out
5 seconds.
Oh, 5 seconds. Oh, okay. Well, 5 seconds is enough. NVIDIA, I'm glad that Ken mentioned that. That is a leaderboard stock and is also an interesting one in the sense of ratings, because this is a company that's on the mend in terms of its earnings. The EPS rating is right now a lowly 69, But if the earnings start coming back in quarter after quarter, you should expect that to rise. The average EPS rating in leaderboard stocks is 79, and that kind of reflects a number of companies that are turnarounds. And Justin has talked about that too, how a lot of the chip companies, very cyclical. Sometimes you're not going to get very, very high CANSOM ratings right at the initial breakout, but those should improve. Let me.
And you know what? One other point on that, David, just since you brought up NVIDIA, is it's interesting that we put that on leaderboard back in October 15th. It was kind of this bottoming base, so not your typical CAN-SLIM, stock where it had that downtrend prior, but again, it was back above its 200-day, something that we were noting, and it did have a very solid base, and it was coming out of that, and that's why we put it on leaderboard.
Excellent point, and we'll make sure we have a quick look at a chart. I'm going to share the screen now with everybody so we can see. I've got the QQQ daily chart, but we can always go to a 5-minute in just a second here, and then why don't we quickly look at some of the stocks that we mentioned. 1 second here. Going to go to get rid of this and go to a 5-minute. There we go. Okay, so you can see right now that an opening gap, meaning that the lowest price in the first 5-minute bar is higher than yesterday's closing price. Also, I want to point out a Marcus Smith chart of NVIDIA, just as we were talking about here, the base forming before a breakout right here at 188.50, and then really quickly match group. This is another one of Ken's stocks that he's watching very closely. You can see that the right side of this base is forming very nicely. The right side, as is seen in the daily chart, showing lots of accumulation days as well. Let's see the other stock that AMAT. Here we go. Let's look at that. This is a daily chart, and you can see that right now, a very interesting pattern. You want to talk a little bit about this, Justin?
Yeah, so it's kind of formed a flat base. Depth is very mild at 13%, and you can see that on the Market Smith pattern recognition. Dave's hovering over that, and you can see it's second stage base, 13% depth. So it's really nice that you hover over that pattern rec, and you kind of get this stuff automatically. You can see very clearly that 6307. That's kind of your line in the sand. It did try and get above that a couple days ago. Came right back down, so it's still kind of hovering right there. If you can see some power come up on that might make this viable. Now, it is kind of one of the last ones. There's a lot of chip makers that have already kind of broken out, so that would be my one concern. The relative strength line, while high, is not near the near-term new high, so that is one concern about it.
I got a question for you too, Justin. Looking at the pattern recognition of Marcus Smith, it says 6307 as the pivot, which is in reality the left side high of the space. IBD's
and we add 10
is
cents.
to add 10 cents, right?
Absolutely.
So for some of you who are either new to Marcus Smith or new to CAN-SLIM, we come up with the 10 cents above a certain resistance point based on back in the 20th century, when we didn't have decimalization. Actually, Bill O'Neill's rule and in our coverage too was to add, I believe it was
an eighth,
1/8 of a dollar. Right, that's right, which is 12.5 cents. So in 1999, 2000. As you well know, the U.S. financial market said, let's get rid of these fractions. Let's forget about 1/32 of a dollar or 1/16 and go to decimals. And that's when we made the decision. Okay, well, let's add 10 cents, 0.10, very close to that 1/8 of a dollar, to determine that pivot point.
And a lot of people do ask, is that 10 cents, on a high price stock as well? That's another thing that's kind of changed. Is a lot of stocks don't split anymore. It's just not as important. People don't have to trade in round lots. So we always just said, hey, look, it has to go through it. That's the main point, because a lot of times it can come right up to that number and then backtrack. It just has to go through it, and ideally on power, that means some volume behind it.
Very good. I'm showing the daily chart right now of Morgan Stanley. Ed pointed out the good response on earnings. Here's a weekly chart. We'll go to the Marcus Smith chart as well, see if there's any actionable moment here. My view, just quickly, is that the company is certainly doing much better had been kind of a laggard in the investment bank group, or now is a money center group. There was a time when Morgan Stanley, Goldman Sachs were actually part of the investment bank group. But amid the Lehman Brothers crisis, it was clear that Morgan Stanley and Goldman Sachs did not want to become the next Lehman Brothers, so they applied for FDIC insurance and thus became money center banks. And it's good. It's good for shareholders. Good for them. They've survived and managed to hang in there. So here's the weekly chart. You can see it's a massive, what I like to call a sort of like an aircraft carrier sized saucer.
Right.
The stock has gone nowhere, and therefore you really couldn't expect the RS line to hit a new high at this point. But in terms of the last 3 or 4 months, it has been rising and looks like it's going to breach some past highs in there. It's very interesting too that you see that there was a couple tests near that 10-week moving average. That's the red line on the weekly chart ahead of today's big move. Let's go back to the daily chart here. So the question is this actionable? Ken, do you want to chime in on this? Do you have a second to look at the Morgan Stanley chart? I'm going to show the weekly. It's not showing. Oh, now it's showing the big gap up here. The high right now 56.9. The highest price in the saucer, if you go all the way back to March of 2018, 59. So a little bit, 3 points shy of that. Ken, any thoughts?
This does not look actionable to me. Actually, I suppose it's up for debate, especially if you look at a daily chart. If we skip to the daily chart of Morgan Stanley, and it is now here, MarketSmith is showing a high several weeks ago of 49.89, and then you see a breakout over that buy point. So this was a stock that was probably a little bit extended from that buy point before today's gap up. So I would not be touching it here, but certainly have to give the financials credit for a lot of really strong performers in the financial sector. It's been a pretty good start to earnings season for several financial stocks.
No doubt. If you look at J.P. Morgan, this was probably one of the leaders in the money center bank, and you can see we talked about this all the way back here before the rally really started taking off, but it did break out around the time of the August 13th follow through. A couple dipsy doos here, but then finally started trucking on to new highs, and then almost getting to the 20% profit target from here. So Morgan Stanley's a little bit late to the party, but still part of the party.
Hey, we've got a number of people asking about NVCR.
NVCR, sure.
I don't know if you guys talked about it yesterday, but maybe a downtrend line. It looks like it might be breaking a downtrend in sort of a double bottom handle in a and such on.
It's great you mentioned this, and thanks to the attendees, because in fact, Mike and I were just briefly quipping about here again, I'm going to say it. It's kind of got that platypus look here, because it's a mishmash of various different bases here. A double bottom, which Mike and I completely agree with. You can see that within this cup base, you can see the breakout did not happen. It didn't breach that left side high, and then formed a double bottom here. And this is well more than 7 weeks long. With that kind of analysis, you would think that this 90.10 would be a buy point. But here we're trying to teach some advanced chart techniques, finding early buy points, and just like Ed mentioned, and thanks to those who Q&A'd us on that, it is clearly breaking an uptrend here. Volume is 96,000, as you expect, kind of high in the first half hour of trade, running 359% above average. But overall, still good. I like the fact that the stock is now back above the 50-day moving average. Don't know much about the company, but I'm very, very pleased to see that now they've turned a profit. As you can see, 2 cents a share in the third quarter. Very nice sales here, up 42%. It's very important to always remember, the mother of good earnings is sales. So make sure you have really, really good earnings. And 2020, Yeah, thank you, Mike and Chris. The 2020 earnings estimate is the kind of estimate I like. As you know, we point out a number of companies, and we'll talk about this in the next couple of weeks or so. That hey, why are we talking about a company with no earnings, minimal sales, and it's partly it's the fact that some stocks are moving in anticipation of big earnings, but that doesn't mean that you have to invest in those kind of companies. We're always very focused on CanSlim type fundamentals, everything in the C and the A, current and annual earnings and sales growth. And right now, looks like Novocure would fit the bill here. 100. Yeah, go ahead, Ed.
Yeah, just to explain a little bit what they do. I mean, we did a New America on this. Allison Gatlin, who is always on biotech and medtech like crazy. I would definitely look for that New America story from a few weeks ago. But I think that they do is they use electrical currents to disrupt cancer cells. And so they've only got it like on a type of brain cancer. It might have been the type of brain cancer that the Rush drummer died from recently, but I'm not entirely sure about that. But they're also testing on a number of other areas in the torso. So you have to wear something like a sort of a giant pad, like it sort of looks like a giant heating pad. Yeah, it's like using it. So that it's really interesting. It doesn't mean, and they've got a bunch of things in clinical trials, but we'll have to see. I mean, will it work on other solid tumors? Obviously, I think people would probably be more willing to wear it on their torso than on their head. So, but when you've got a life and death situation, this could be very useful. But we'll have to see a lot of these things. There's obviously so many advances in cancer on the drug front, and gene.
This is great. As you can see on the screen, everybody, in December 4th, we had the New America feature. This is once a week, as always in the IBD weekly newspaper, but also obviously online. I showed you how to reach it. And basically on Mondays, Chris Gessel and our tech editor Russ Britt, they powwow to talk about, hey, what should we write about? And so this is one of them. And in almost all cases, these New America stocks will have very, very robust earnings, excellent sales, something very new. Obviously, it's a part of the New America, some innovative product or service that is transforming the way we live, work, or play. So keep that in mind as when you're looking at a stock like Novocure. If you're going to buy a stock like in the biotech group, or this one's not biotech, it's medical products, keep in mind that some are going to be a little more volatile than others. But having that fundamental knowledge, really knowing the story behind the story of the stock, is really going to help you sit tight when it's right. So let's
Other thing
look
we
at the weekly
mentioned
chart.
yesterday about Novocure was the fact that T. Rowe Price New Horizons not only is an owner of this stock, but has been increasing its position in recent quarters. So,
yeah, and we should mention that a lot of people were asking where they can find whether the position is increasing for funds. Unfortunately, that is not something that is in MarketSmith. It's something that we do have available to us on our institutional product. However, Chris Gessel is actually making a big push to get that added to MarketSmith. So he'll be fighting the good fight.
Wonderful. Thank you, guys. I'm going to move on to a company called BAH. And this is courtesy of Jill. Thank you, Jill, for noting Booz Allen Hamilton. It's funny, actually, I did a little contract work for Booz Allen many a year ago. So this kind of company is kind of near and dear. Chris is like, what? Is that true?
Yeah.
What? What are you talking about? And it is actually, when I was a journalist in Japan, they were very interested in getting my thoughts about how the mass media digs up scoops. So I did a little research paper for them after spending about 8 years as a bilingual journalist in Tokyo at Kyoto News. So this is part of the professional services or consulting group, but it is essentially a professional services company. Notice, everybody, that this is a mid cap, despite a very nice monthly chart. Looks like TDG as a toddler. And we'll go back to the weekly chart here. Very nice flat base. Thanks again, Jill. I would say that this is definitely actionable. We have a market and confirmed uptrend. The growth, on the sales is accelerating a touch. And what I like too is looking at those companies that have earnings per share growth that is running at a faster rate than the revenue growth rate. So if you're trying to find some imperfections or faults with the stock, and you say, hey, well, look at BAH, the 13% sales growth doesn't meet the C in Can Slim, boys. Well, actually, keep in mind that this is a company that's had very, very steady top line and bottom line growth for a long time. You can see that since at least 2016, the earnings have been steadily growing. Let's look at the ROE. I doubt that ROE is purely without any boost in debt, because you can see 64% ROE is based partly on that long-term debt to equity ratio of 252%. That is ginormous. That means long-term debt at the end of December last year, 2019, was 3.5 times the shareholders' average shareholders' equity over the past 2 years. So that's a little bit concerned, but still, the cash flow, I can imagine, be very, very strong. Justin, you want to take a look at this chart?
Well, one other thing I was going to mention is that this kind of speaks to something that I just talked about on the podcast with Arusha. That's going to be dropping today. And we also mentioned a little bit on the video yesterday, this long-term leaders concept. When you have something that has this very stable earnings, it has a record of, continually, just going up without very big swings. It's not like the 40% plus bases that you get with some of these high flyers. So it kind of has a very similar look to those things that we're looking at. And I mentioned a number of those on the podcast yesterday. Fiserv and TransDigm are two of the kind of poster kids. And sometimes it helps when you step back. And if you wouldn't mind maybe going to a monthly on this, David.
On Booz Allen, right?
Yeah, on Booz
Absolutely.
Allen. Yeah.
And then we'll quickly go back to the weeklies.
Yeah.
I want to make one more comment on that.
Yeah, you can just kind of see, this is fairly early. This only came out in 2011, but
That's right.
It's got that look of something that just can power ahead very nicely. So yeah, this is something that's interesting. And the one thing on these long-term leaders sometimes is that they aren't always the best at the breakouts. Sometimes they can be what Chris often refers to on this show as the stair stepper. But with the long-term leaders, that can be a good thing, because those stair steps just keep on going, and you look back and then you see a monthly chart like this. Stairway to investing heaven is what.
I'd like to talk about
I like that. I like that. Let's. Oh, my favorite Led Zeppelin song. I hope we get the license to play that in the background. I played the Mozart because I know a few of you like classical. I like classical. I played violin, so
were you going to make a point there, Ed?
Classical music.
Well, I was going to go to want to go to Costco, by the way.
We certainly will, and we're going to go to that next. But right now, I just want to point out to you, everybody, check out the weekly chart. See this big up week in heavy volume, and the orange cloud over that. That indicates that this was the highest volume in a long time. That seems to be indicating some kind of extra accumulation. Now, Costco,
and I should point out that Booz Allen isn't a stair stepper just based on that last breakout. It had a really nice run there. So I was mentioning that for a lot of long-term leaders, but not necessarily Booz Allen.
Thank you, Justin. Now, a couple of weeks ago, or maybe it was last week, I can't remember, we talked about 300 as a pivotal point in the course of the short-term history of Costco right now. A half position leaderboard. I own shares in an account I manage. I'm very bullish in this stock too, despite the stair stepping down relative strength line here. It is popping up since January 1st, so that's a positive. But as you know, this is the kind of stock that's supposed to allow you to sleep well at night. Very actionable here as it's continuing to leave 300. Keep in mind here that this cup with handle, very shallow, didn't work out very well. But sometimes bases next to bases really provide a golden opportunity here. Over 300 would be a little bit aggressive. Clearly, if you want to be conservative, so to speak, and wait for the genuine breakout from this new flat base at 307.20, no big deal. I mean, that's really 4 points above the current price. That's 1.33%. Same difference in my view. Was there any news on this one, Ed, by the way?
Well, we sort of had news because it was, as some people have noted, we took some action today here internally. But,
yes.
But I don't see any news news
Okay.
on it specifically. I would just say that, no, this is one of the ones that actually had already gave out December sales. So when Target's news came out, Costco wasn't hit that hard in the morning, and it
Right.
actually closed up. I mean, not much, but given how Target, Costco had good digital sales, it's up nicely again. When after Target coming in really weak, so that was just really, it's impressive performance that way. Obviously, we know that Costco had a good holiday season, but
Totally great point, Ed. And I was going to add on to that because you hit it on the head. Target down 8-10%, and look what Costco did. Costco positive reversal. That's strength. You couldn't get any better tail of the tape comparison here among two heavyweight giants in discount retail. I just showed Walmart too. Walmart's a stock I've held a very, very, very long time in an account I manage. But Walmart also, struggling because unlike Costco, Walmart is in the sort of the belly of its current flat base here, well below the 50-day. Let's go back to Costco.
Yeah, they haven't released any numbers, so we don't know how their holidays went. So
right, okay,
they're a little spooked by Target in a way that Costco, we know what they did in December. So
yeah, and also Ken Shreve had made a really great point during the videos as well as our stock market today coverage about I think it was just a couple of days ago. Costco reported very, very robust December sales, where comparable sales, right, and they're still on track for a second store in China.
Yes, and also digital sales were surprisingly strong. So this is to see the stock comfortably above the 300 level now is certainly compelling. If you look at the daily chart, you see several above average volume price gains. So starting to show renewed signs of accumulation. Still forming a base with a conventional entry of 307.20, but this one is definitely looking pretty good.
Well, and that whole idea of this, starting to expand into China kind of opens up the thought, I think, of what is the potential for Costco here? I mean, is this something like Price Club when it was opening its first stores in San Diego, way back in the day, and the expansion. Same thing with like a lot of these retail, even restaurants. Chipotle, its big move was due to a lot of its expansion. So if Costco has this huge market that it has the potential to expand into, what is the potential for that? And we'll just have to kind of see how this story unfolds.
Here's the leaderboard take on the Costco action here. We've noted a 307.20 buy point, and that's a flat base as we talked about, but we also noted that a move above the 50-day line was an aggressive entry. Let's see if we can bring up the chart.
And Mike just tallied one for the product placement, Dave, right?
Exactly. I'm proud of the fact that the New America was my first product placement. I guess Market Smith was really first, and then New America. Now we got the trifecta here with the leaderboard chart. Costco, you can see we noted this is the product of many hands. Chris, Ken, Juan, Mike, Justin, and myself. We're all involved with the stock selection, the entry and exits. You can see that we cut the stock in leaderboard to a half position on December 12th. We also do some of the annotations here. We noted here, for instance, strong relative strength line in the second half of 2019, and then a pullback recently. Let's move on. I want to see if there's any other ones that we should talk about. Nail. Excellent. Thank you, Chris. I'm going to put up Nail and not this chart here. I've got so many charts sometimes it's hard to keep track. NAIL is a triple leveraged housing and supplies related. Let's try that again. There's Nail in buy range from a consolidation that also has, at first blush it looked like a flat base, but check that out. Time saving at little research from Market shows that the depth of that consolidation, 16%, was just a little bit beyond the 15% maximum threshold for a flat base. Nonetheless, we're seeing a 1 o'clock sloping RS line. Scott Sinclair's talked about that, how, when the stock's breaking out, you want to see that RS line rising at a slope of either 12 o'clock or 1 o'clock, 2 o'clock, 3 o'clock, maybe not so hot, but maybe that's to be expected in a large or mega cap stock. don't be too worried about the average volume. Look at that, 67,000 shares, because ETFs can, according to what Chris has taught me, can basically manufacture an infinite number of shares.
Well, and you know, part of the thing that happens here is, you know, there's arbitrage to kind of, you know, get the pricing close to the net asset value, and so a lot of that gets handled. So what's more important on the ETFs when you see a small number of shares that are getting traded is to look at the spread. And so right now, the spread is only about less than 30 cents. So it's 80.28 by 80.54. So it's not a big spread that you're dealing with. That's what's more important to look at. Yeah, and if you want a smaller spread, Chris was just kind of mentioning that you could go with ITB.
Let's look at ITB real quick, and then we'll then quickly.
Of course, you don't get the triple leverage.
Yeah, look at that, and it's amazing. This one has a much heftier average daily volume, but still they seem to be acting in tandem, and that's what you like to see. Earlier this week, or maybe it was last week, here again, like I said, a little bit of cold I got in Europe is clouding my memory a little bit on the short term. But I do remember we talking about Toll Brothers, TOL. What a fine breakout. Look how this is, this is a real lesson for everybody, including myself. And I love to relearn this lesson. Look at this breakout on January 8th. It looked like it was just going to go to sky heaven, right? And then it finished the day below the 41.80 buy point. Is that a sell? It's actually not. It's not a sell because you got to wait for the stock to give a chance, by the end of the week. And it didn't trigger the 8% loss rule. It was not a gap down. It was just kind of a wild day. You had the down day here. Look at the quiet volume on this down day. This was on January 9th. The volume was 1.8 million shares. The volume on the breakout, 3.2 million. And then you've got 3-4 big up days in a row. So very, very, to me, classic action. I was looking at an old chart in Biogen, BIIB, and I saw exactly the same kind of action about 6 or 7 years ago in a past chart that I've kept in my little chart diary. So, these kind of things happen over and over. It's greed and fear. It's uptrend.
I think you're missing something. The real market analysis on something like Toll Brothers and other home builder is non-analysis. The key to a home builder stocks working well is to not look. Just turn away, and then the housing stocks will work. Because anytime we look at the housing stocks, it seems like they just falter. I mean, it's like, oh, there's Toll Brothers breaking out. Oh, no, it's not. And then, okay, I'll look away. No need to look. Oh, there it goes. I mean, I tell you, it just seems every time. And they were big winners in 2009. In recent months, they were big winners in 2017. So they can have big runs. But man,
That's a great point.
It's a boiling pot. You cannot watch them.
Ed, you're absolutely right. I remember as a younger reporter, I can't say young, younger reporter, back in 1999, 2000. Do you guys all remember the huge home builder rally after the tech bubble peaked in March? And
oh, sure, yeah. NVR was one of the big ones there.
The craziest report I ever read was the fact that I believe this analyst believed that stocks in home builders would go up as soon as interest rates would go up, and had this incredible, sort of contrarian over contrarian analysis. I just couldn't understand, and that's kind of making to Ed's point. Sometimes you can't really understand the entire story by just looking at the last quarter or two of sales and earnings. Not for every stock in the home builders. LGIH, that's been a big winner. NVR, very, very steady. But the fact of the matter is that interest rates are still low. Very, very few people on the street are expecting any kind of rate hike. In fact, more people I've talked to see perhaps another rate cut. Let's move on here. LK obviously is always in a lot of people's minds here. Very nice move. We've talked about taking profits on the way up because it is a very, very wild mover, but excellent action. Looks like it's bespeaking a good omen for the future of the Chinese economy, particularly as they drink more coffee and drink less tea. Let's see what else.
A question that I wanted to address.
Could I
real quick.
chime in?
Yeah, go ahead.
Yeah, go ahead, Ken.
Just I wanted to take a look at Stoneco,
excellent.
STNE, one of the top performers on leaderboard today. And this one still has the look of an emerging leader. There's an alternate entry here of 41.98. The stock did gap up this morning. But I still really like this company again because of it's still early stage and still toying with a breakout over an alternate entry of 41.98. With the market in a confirmed uptrend, I still look at this as a legitimate breakout candidate.
Yeah.
Ken, you had written the big picture yesterday. Do you want to highlight a few points from that? If I do remember, you and I, 5 minutes, 10 minutes before the close, like, oh my gosh, are we going to have 5 different permutations of what the market pulse in the big picture will be?
Well, we were kind of flirting. We were kind of flirting with a stalling session yesterday in the market, but volume on the NYSE and Nasdaq ended up being lower than the prior session. But one of the points I made in the big picture yesterday was that amid a lot of calls for a market pullback and the fact that the Nasdaq and S&P have performed so well since we went back into a confirmed uptrend back on October 15th, the fact that everyone is calling for a market pullback and stretched valuations and this and that, the fact that the crowd is leaning one way means that this uptrend could keep working. So you need to pay attention to all the bullish setups, and there's still a lot of them out there. I think the continued leadership in semiconductor stocks is still very important. And mentioned the home builders showing renewed signs of strength after some pretty stiff selling in the group late last year. But I think that's a vote of confidence in the market that interest rates, like you said, aren't headed higher anytime soon. So
I think I just mentioned that just to bring up the market. I think that all the major indexes are at record highs. I think we're close to highs of the day.
Yeah.
Dow's up 0.55, S&P 0.5, the Nasdaq is up 0.8. Housing market index just came out a little bit ago. It came out at 76 versus estimates of 74. Readings above 50 are optimistic. I don't know where this ranks in the realm, but it's very, very upbeat. It comes in with the housing information that we were just talking about a little bit ago. There were some people who were asking about United Health. It was coming up toward that second buy point. I know this was the stock of the day. I did watch.
Thanks, Ed, and thanks, Chris, telling me speed up a little bit with the stocks, because I love to wax about CanSlim and other topics. So we'll try to do a bullet round in the next 10 minutes for everybody. I've got a few stocks we're going to go through. United Health, new leaderboard stock, a half position. We like this this pullback. You can see it more explicitly on the weekly chart. You can see that was a 10-week pullback, first time since the breakout from this long consolidation. So in our mind, still actionable. Let's go to TSM. This is a newsworthy stock. It may be helping the chips rebound from yesterday's sell-off. This one is up about 1.7%. Not actionable. Thanks for the questions on that. In my mind, you can see, in fact, the stock is blew past the 25% profit zone from a couple down handle. So don't be chasing here. It really, it was interesting to me here is that look at this pullback to 52. It never touched the 50 days, so you would think, oh, well, I guess I'm not going to have a chance to have a follow-on entry. But if you go to the weekly chart, maybe it did, in fact, come a lot closer to the 10-week moving average. So, in fact, you can see here it was a nice reversal, higher volume than the prior week. And to me, that was a legitimate follow-on entry. This kind of tight action on the weekly chart looks like there might be 4 weeks tight, maybe a buy point here. Let's see.
Kind of looks like what Mike Webster calls a shelf right there.
A shelf, exactly. We got to get in there. I'm all about product placement for Mike's concepts here. So, we have many names for that too. I think in our advanced chart reading home study course, we talked about it as a O'Neill tight consolidation or a narrow consolidation. I prefer shelf. I think that's just nice and sweet. But look at that. Let's see. 0.5% drop here, 0.9% gain, 0.7% drop. So that's a 4 weeks tight going all the way back here. And now we've had a 1.4% gain last week, and we're continuing to rise. So it looks like 59.81 would be a legitimate entry here. I'm taking 10 cents above the initial left side high of this 4 weeks tight. Let's move on to PCTY. Every time I look at this ticker, I always think Party City, but in fact it's not. It's Paylocity. Here we go, nearing the 20% profit zone. Here's that mint green strip on your Market Smith chart. The bottom of the strip means that that's a 20% profit from the buy point at 112.56. The top end of the strip, that would be a 25% gain. Now, if you have incredible knowledge, conviction, experience in this stock, by all means, so long as the software sector and the market stays in a nice steady uptrend, you can in fact keep holding. Maybe you want to wait for a pullback to the 10-week moving average as a time to even compound your gains with an additional buy.
I got a question for you on this one, because
sure.
It wasn't quite, this isn't like some of them, but it had basically a 4.5 week shelf. It almost was another flat base, and it rebounded on a weekly, it went up from a 10-week line when it sort of got near the bottom of that shelf before pouncing out. Does that, I don't know about a shelf, but does another base on base, because it's almost a base on base, so it feels
Excellent
like it's
point.
not that extended
Right.
to me. But
Justin,
so that's how I
I'm
would interpret
going to answer
it,
this, but Justin, I'm going to try to be a gentleman and let you answer first here.
Okay. Well, I do think it has that look, that base on base. And getting back to the point of, okay, you're up 20% from that initial buy point, but this was certainly one of the leaders of this rally. It was one of the first stocks out of there. The software came back very strongly. That whole sector came back, and this is one of the leaders in there. And so that's where you start making that determination. Okay, is this one that I maybe hold for a little bit of an extra gain, as long as it's acting right? So a couple ways we might do that. Sometimes what we'll do is we'll say, oh, you know what, we can take a little bit off the table, let the rest run. Or, sometimes we'll use the shorter term 10-day moving average and say, okay, we're going to see if this can give us a little bit more juice. And then if it crosses below the 10-day, then we'll kind of start, paring back a little bit. So just because something hits that 20 to 25% range doesn't mean it's an automatic sell. Remember, the rule is that we take most of our profits when we can at 20 to 25%, and we're going to let some of those run and give some others some extra room. It just depends on what you think, what your conviction level is.
I'd like to bring up something. When I was doing something with Arusha, who, I was really glad doing this webinar a few months ago, talking about dealing with earnings season. And isn't it interesting that the 20% rule seems to fall in line with the fact that he often do sell ahead of earnings. Now, Paylocity isn't for another 3 weeks, but it's not that far off. I mean, there's an argument to say like a stock may run up, say, 20% during a 3-month period if it's doing really well, and then you have a question: do I sell or not? Because in a few weeks, I'm not saying right now, but soon enough, you may decide, well, do I want to hold this into earnings? That's another question. So sometimes, and I think these rules line up with each other.
And I think that kind of comes down to what kind of trader are you? Are you one that is trying to get that big move out of some of your stocks? Or are you more comfortable saying, okay, I'm going to hold it for the quarter. I'm going to get that 20 to 25% gain. I'm going to sell, and then I'm going to wait for another opportunity, get back in, maybe play the same stock again after its earnings report. And, you kind of reduce your volatility a little bit in that way. But, you aren't going to get that big gain, because that does require holding on to stocks longer term.
Yeah.
Great conversation here. Ed, thanks for mentioning that discussion with Arusha, also one of our fellow panelists here on IBD Live. I just want to point out that I agree that this is a shelf. This is a tight area. It wasn't long enough to be a flat base, but you notice that the down weeks were very, very tame. They never went below the pivot, still above the 10-week moving average. Look at the volume on the down weeks. Two of them were both heavy, but the volume on those down weeks were not as heavy as one of the key breakout weeks. And then finally, once it started to really have that rubber hits the road kind of moment by testing that 10-week moving average, you can see that it had a positive result. It didn't skid off the highway here. In fact, it went more toward a profit-making route here. So I would argue, yes, that the 122.75 did offer a follow-on entry. Just make sure that when you try to add shares to a winning position or existing position, don't add more shares than when you initially bought. Make sure you buy a smaller share so that you are pyramiding properly.
Hey,
Let's
could we
look
go
at
to Insulet, by the way? That one.
you know how wow. How did you have that X-ray vision, Ed? Here's a little note I got from Chris. Thank you,
Yeah,
Chris.
well, he got the same
everyone sees?
idea. He saw it from I think Gary Stahl was noticing it, and this tried to break out yesterday. I think it closed just below the buy point, and now it's moving it. It doesn't look like there's much volume in it. Maybe that will pick up.
Yeah,
But
you know, I would
would
say this, everybody. You know, this to me is actually, thanks Gary for the question, really not surprising to me that there's not much volume right now. Partly because you know, we've had a big run since its initial breakout all the way back here.
Yeah.
You see, this is the real breakout day, not over here, right? The real breakout actually happened here in May of 2019, and you can see the volume was 94% above average. And then you had a test of the 50-day, another test, a big test, right, during the fear about what's going to happen to the trade deal, and then another big move on heavy volume here. So if you're buying on this cup base, clearly, I think it's a great point that you want to see heavy volume, but maybe the stock is a little bit tired because it's already had this big move. And so that could be a small risk. That said, the uptrend is very strong. Another thing I like to do personally is, okay, if you're not seeing heavy volume on the actual day of the breakout, there are two things you can do. One is watch for how the volume for the week finishes versus the prior week. If the volume for the week is higher than the prior week, then you have some at least positive sense that institutional demand is still solid and strong. And another thing too is that you want to make sure, well, maybe Wall Street traders are looking forward to some kind of news event, whether it's at a conference, whether there's some new product approval in the wings. Earnings is clearly not the issue right now because you can see that right here that the earnings are expected to come out for the latest quarter in February 25th.
You know, I think that, I mean, while there has already had a run, there's nothing wrong with having, obviously a lot of the best stocks often have already had prior uptrends. It does help that Dexcom has been doing well. This is also in the diabetes space. That one looks very similar in the recent months. Stock is holding above a very similar consolidation, breaking out a few days ago. And Tandem, they announced some new product that actually worked with Dexcom.
Wow.
So Tandem is trying. It tries so hard. It really does. But it's had trouble. But Dexcom, I would take a look in Tandem. Tandem is moving there. The question is, do you want the third best player in that space?
That's right.
When Insulet and Dexcom, I think Insulin is on Swing Trader and Dexcom is on Leaderboard.
Yeah, I mean, let's be clear that Tandem and Pod are, as far as I know, direct rivals because they actually create the injection device for insulin to keep a patient's insulin level at the right level. And then Dexcom, I own shares in Dexcom, is a monitoring CGM, continuous glucose monitoring device maker. So they kind of work in tandem. But you know, to Ed's point, Tandem clearly, in my mind, is also the third best because after you know, a stock going below $10 a share and going all the way up to 70, boy, you're going to have to expect a long digestion phase in terms of this big gain. Going back to Pod, this one also very positive, like we mentioned. Nice pullbacks to a 10-week. Keep it on your watch list.
If you could go to the daily real quick on that, Dave, I just want to one thing to point out real quick is that we did put this on Swing Trader back on January 6th. So this is one where sometimes it's good to get these on the pullback. Now, of course, we wait for that strength to come in, and you saw that strong bounce off the 50-day moving average line, and so that's where we added it on Swing Trader, and we're looking at almost a 10% gain on this. Also saw a question on Paycom. Paycom is one that we've been talking about a little bit. If we kind of pivot over back to the computer software, and you know, the question was, okay, this kind of has a base on base look to it as well, which is very nice. And as you can see on the market Smith pattern recognition, it's still within that 5% buy range. You know, so this is still early on. You can see that you know, if you could kind of go over to the left-hand side, that first base that was over by 246.85, we undercut that base to the right, undercut that base, that reset the base count, and now this base is still considered one base because it didn't go up 20%, so it's still considered one structure here, and we're within buy range there. So someone was asking, is this still buyable? Yeah, it's still in the buy range. It's still within that 5%. We like to get as close to that ideal buy point as possible. It just helps when you're pyramiding, when you're building a position, to kind of get as close to that buy point as possible, because it helps all your selling and holding rules as well.
This is not a great looking breakout, in my opinion, for Paycom. It was kind of a very low volume breakout. First of all, you had several up sessions in a row and light volume, and then earlier this week you had big sellers in the stock where it turned lower, pretty significant percentage gain. So, I mean, technically it's holding above the buy point. It's in that workforce management, human capital management, along with Paylocity. So, respect the fact that it cleared a buy point, but it's not much volume behind this move.
And that's something that's been a little strange. I feel like for a while, I think we've been struggling with these low volume breakouts. And so sometimes, with Swing Trader, we get a little cute and we'll say, okay, how is the volume in comparison to the recent volume? Not necessarily the 50-day moving average, but 10-day volume, because there's a kind of a shorter term bent to that. But that has been an issue, I think, coming up over and over again with some of these low volume breakouts. Sometimes they still work.
Booz Allen Hamilton that we talked about at the top of the show, that consulting firm, also just no volume behind the recent move, trying to take out a buy point with conviction and not having much luck. So low volume there as well.
Good point. Good points all. I do want to say that sometimes I think it's going to be an ongoing issue for all of us CAN-SLIM investors going forward. So long as Regulation FD is in place, you're going to have tentative breakouts in terms of volume ahead of a major event such as quarterly results. Personally, I always think about NVIDIA, stock I owned back in March 2016, huge breakout. It was around $32 a share. Look where the stock is now. And it broke out tentatively, but then a few days later, the volume came in and it was still in buy range. We've written about that in Investors Corner. And then after that, big breakaway gap on the actual quarterly results. So that's the kind of cadence that you're going to have to come to expect, whether you're new or you're a real veteran in this game of CAN-SLIM investing. And just keep that in mind. You have to be very aware of what's news is going to be coming up. In addition, what is the stock trying to tell you in anticipation of the earnings? Let's go back to NVCR. We talked about this at the top of the hour, and it's acting very well here despite the. I'm sorry, did I miss something? Wow. Yeah. So all of a sudden the stock looked very different, didn't it? Thank you. Thank you very much, Chris. And look at that. Now it's testing 90, which was a short-term resistance line. Also happens to be the double bottom that I see. And I'm sorry, I'm going to say this again, but in this very interesting looking platypus base here, 1, 2, 3, 4, 5, 6, 7, 8 weeks. So this alone can be a standalone double bottom next to this cup. So clearly the cup did not work out. Clearly this is not a IBD style handle, too deep, too wild, but you've got this clear buy point. And we talked about the trend line that you can draw from 96.14 over the 90 midterm high. And you can see is acting very well.
Yeah, if you think of it as its own base, then it doesn't look so bad. But would you say that platypus bases are more likely to lay an egg?
No, because they've tested they've tested the winds of time, Ed.
Could we take a look at AAXN? Somebody was pointing out it's sort of moving up again. It had rebounded off its 50-day line, 10-week line earlier this week, and is sort of trying to make a comeback after that whole weird sell-off on the FTC, which that is something that's still out there, that threat. But I know we had looked at this one a lot, but it's got another flat base next to sort of a couple of wild bases. Maybe this would be the base. Not that this is the safest and calmest flat base, but I guess that's what.
Right.
I guess that's the
well, that's a great point, Ed. That 12% depth, as you can see on the chart recognition. I personally like the fact that the stock has got really good numbers in the last quarter, 40% growth. And these aren't like, 4 cents versus 3 cents. This is actually 28 cents per share versus 20 cents. As I've said on the show in the past too, I really like those companies that can really generate 100 million in revenue on an annual basis if they're really, really new, or if they've been around for a while, at least 100 million on a quarterly. So that meets it. Looks like the after-tax margins has gone up a lot. I would say at this point, keep it on your watch list. It's nice to see the support along the near the 50-day. And then we got some questions about OLED, which we've talked about. Justin, take it away.
You know what? This is another one. So Ken was talking about the low volume. He mentioned that earlier, and this was another one that had a very strong breakout on 1226. The volume was there in this case, so and then it kind of trickled off from there. But this is kind of that ideal situation where you get the volume on that breakout. And it was a little weird that it had that kind of I don't know, a little bit steep maybe on the left-hand side, and it didn't come up nearly as much as we would normally see. I think the handle seemed a little low, but it was in the upper half, so it does meet a lot of the criteria. And again, you did have the volume in this case. And we should also mention that this is still in the buy range. It is in that 5% shaded
I'm kind of
zone.
surprised this one hasn't made more progress after that breakout, because the volume was very solid when it cleared the 208.11 buy point. Now it's just been kind of floating around, still in buy range. We really haven't seen any meaningful follow through after the initial breakout. Volume has dried up. Would have expected this one to move more.
Totally agree. On the positive side, you see on the weekly chart that at least the stock had the muscle to hit all-time highs after that really, really sharp decline. I mean, look at this. Look at the depth of this base. This, from here 209 to 80. That is totally abnormal, and yet it recovered very nicely. Got a new product with the organic LEDs. I'm wondering whether this is a stock that's going to require some big news, like iPhone 11 or something is going to exclusively use Universal's products.
Yeah, and I think just the fact that it's been sluggish after the breakout. If you're currently holding the stock and we're a buyer when it cleared 208.11, the fact that it's been sluggish doesn't mean that you give up on the stock and say, well, it's a laggard stock and I'm just going to lock in a 1 or 2% gain. Right now, I think it makes sense for the 50-day moving average is kind of just a little bit below the last buy area, but this is one where you just give it the benefit of the doubt for now. Just because it's been sluggish post breakout doesn't mean you sell and move on to another stock. Give it a chance to work. It's still good. It's still good, and I think the 50-day moving average currently, which is around 202 right now, that's a little bit below the 208 entry, but I don't own shares of this, but if I did, I would wait for a test of the 50-day moving average.
And one question that some people come up with is, okay, the relative strength line, wasn't in new high territory on that breakout, but if you could kind of hover over there, David, where the breakout is, the relative strength line at that point was definitely, into a near-term new high. So it had crossed that previous, high in the relative strength, back on October 31st. So, sometimes that's enough, to show that, hey, this is something that has got the power. The relative strength line is doing the right thing. One other question that we got yesterday that I just want to address real quick. Some people were asking about the blue dot and what that is. We refer to it a lot of times. What the blue dot is it's noting on MarketSmith when a stock has the relative strength in new high territory while the stock is in a base. This can be a very powerful thing for finding ideas, because those stocks tend to be the leaders, especially when you see them after a market downturn. This was something that we saw after the Q4 2018 downturn. Software had a lot of the blue dots, and those were the ones that were really kind of leading in the first quarter of January 2019.
Very good. Let's move on to a few more stocks. We'll get back to I guess I would like to call it a slow lightning round because we want to add insights as well as mention stocks here. Blackline, thanks, Chris, and also to our attendees for noting that this is a very nice move. Unfortunately, it's out of buy range now. Huge volume today in the software, specialty enterprise space. So, does it feel a little bit like deja vu now versus the first month of 2019? We saw a lot of enterprise software stocks really jam. The Nasdaq outperformed. Leaderboard stocks were really really humming along too in the first month of the first quarter. So unfortunately, while we did not talk about this on the breakout here, the fact that it's acting well makes you want to look at other names within the specialty enterprise group. Maybe we'll have a chance and look at others in a bit. Chris also pointed out to me that TNA.
Well, if we just real quickly go back to Blackline, a couple other points on this. It is another one of those where the handle is long enough to be a base in its own right, and also note like how this relative strength line is, really kind of showing a lot of strength here, and the volume. This is another one where the volume wasn't there on the breakout, but look at how that volume did start coming in just a couple days later. So sometimes, you do see that, it'll be maybe a couple days before, a couple days later, but the volume was there, and so it can make you feel a little bit better about.
By the way, Blackline based in Woodland Hills, California, not necessarily a tech hotbed, but I drove by their headquarters. I said, "Oh, Blackline, I know that company."
How interesting!
I live, very close to Woodland Hills.
I also, this is why you run your screens, because Blackline is not the most famous name. Yeah, it's easy enough to look. I'll look at Microsoft. I'll look at Apple. Sure, but you need to run your screens. I mean, this one has not had the greatest history, so maybe you don't decide to buy it at the time. It looks great now, but when it broke out, maybe you said, "Oh, it's had a lot of failed breakouts." I don't know. But this is why you run your screens, to be looking for them, so you have them, so you're prepared. And if you like it, the look of the chart, you may say, "Oh, I'm going to do a little bit of research on this. What is it like?" Because you don't want to be trying to rush that in after the fact. Oh, it broke out. What is this stock? What does it do? I mean,
excellent point. And right now we're going to do a little research for everybody by looking at the top stocks in the specialty enterprise software group. What a mouthful for the industry group. God, I wish we have a new name for that group. But in any case, software sector, very, very important. And as you can see here on Market Smith, I moved to the right over here and clicked on the industry and sector, and then I clicked on view stocks and industry, and then I sorted them by declining EPS rating. And you can see we have a bunch that have a 90 or above. We're looking at, we've talked a lot about Atlassian in the paper on i.com, and it's been on leaderboard as well. Nice consolidation forming right now, above the 50-day. Cornerstone is a Santa Monica-based company. That's one that's actually breaking out. Not a heavy volume. The average volume is decent, but not heavy. It's under 500,000. But good earnings growth. I'm a little bit concerned about the sales growth, but it is accelerating. That's nice. And then let's look at one more before we move on. MyTech, that's too thin. SPS, here's a base on base. That's looking good. RealPage, RP, basing now back above the 50-day, and then Tyler in an uptrend.
So one other one, and just so people know that there's different ways that you might sort. So David here sorted on the EPS. A lot of times I like to sort on the RS rating, and one of the things that this did was this brought us, exactly. So this brought Ceridian up. So C-Day you can see as the third. This is one that just week after week after week, this just keeps on going up. It's just been an amazing run on this one.
Nice. And as you can see, it's hit that very, very nice, fresh, minty green strip that I like to call it, which is basically, take some profits, at 20% to 25% if you want to move on and find another great thoroughbred to ride on. But if you have, as Justin said, a lot of conviction and knowledge about the stock, and you want to hold it further, aim for a bigger gain. That's fine. Now, going back to TNA, which is a proxy for the small caps, acting very well. Looks like it's kind of moving in the same direction as the S&P 600.
That's right. It's
Yeah, so this is triple leveraged, right?
Yeah, triple leverage. And here again, we always get questions about why are you looking at triple leverage stock ETFs, and the simple answer here is that if we want to trade ETFs, we want them to perform as well as stocks. And in our research, we found that the triple leveraged act more closely to a regular cancel and growth stock than say a double or a non-leveraged name. So when you got a triple leveraged ETF, clearly more risk, more reward. Keep your sell rules. Be very defensive. Protect your capital. Be aware of the current trend in the market. And Chris, is this kind of actionable, or you just wanted to point this out? Oh, okay.
You want to jump on?
Oh, that's right. Okay, so Chris, I wanted to point this out to everybody because while it might not necessarily be truly actionable from a base standpoint, it is kind of clearing this little type pullback. It's more indicative of the nice action that we've seen in small caps since the start of the year, because they did underperform in 2019. So I think that's a great point. Always keep that in mind as you're selecting stocks for your ready list or your watch list. I think we're kind of caught up in the number of stocks I wanted to discuss. Let's quickly go back to some of the ones we did. Costco, still acting fine. Volume is running 57% above average there. Let's go back to NVCR, Novacure. This is, it's great that we've been talking about this numerous times on the show, and it's acting well. Volume running 279% above average. We still have a lot of questions, and I'm going to say right off the bat, we love all your comments and questions, especially especially those are very constructive, and you've been a great asset to the show for everyone else too, with pointing out breakouts or asking about certain concepts. I did mention that Reg FD refers to full disclosure. I think it was enacted by the SEC in 2000.
I think fair disclosure, I think, is the term.
Fair disclosure. Yeah. Okay.
Yeah.
I thought it was full disclosure.
Okay.
But in any case, it basically it tells CFOs and CEOs not to spill any of their beans regarding the upcoming quarterly results or annual results to a small little gaggle of analysts, so that they can then tell others and then cause a natural breakout that would often happen before the earnings would come out. So basically now, as you well know, if you listen to the media about this issue, you'll notice that, oh, this so and so CEO won't talk to us because it's a quiet period right now, 2 weeks before the earnings, and therefore any kind of material news that comes out regarding the company has to be disclosed to the entire public all at once.
And that's what makes it fair, the F.
That was the intention of fair disclosure, full disclosure. If you just simply Google SEC Reg, or short for Regulation FD, you can get all the nitty-gritty details. But it truly has transformed the market and the dynamics of growth stocks and chart patterns for that matter too.
Yeah, there is that unintended consequence that everyone is now kind of trying to decide how to value the company differently based on this one very abrupt kind of change that can happen once a quarter. So whereas before that was kind of trickled out a little bit and started getting put into people's models, now it's happening all at once, and they're sometimes trying to make those decisions after hours.
Thank you, Justin. And now we're past the 10:30 Eastern, 7:30 Pacific time frame. So rather than go through all the stocks that we did, I just want to highlight that we did cover in considerable length about 13 or 14 names. So that's more than enough for your watch list. I'm going to use this opportunity to answer a question regarding leaderboard. Thanks to RRRR about what is a full position on leaderboard. And we've talked about this before in the beginning of IBD Live back in November. We consider a full position to be 1/8 of your money in a cash account completely devoted to growth stocks. So if you have a $100,000 portfolio, a full position at the minimum would be 12.5 thousand. Half position would be or half of that 6.2 thousand, 6,250. So within $1 million account, the same deal. 1/8 of that position would be 125,000. To limit your risk while still commanding great upside, potential upside. Once a stock breaks out, you might want to consider doing a very fast pyramid portfolio move, which is to buy only 50% of the full position that you're devoted toward should the stock work out right at the breakout point, 50% of a full position. So once a stock goes up, then 2 or 3%, add another 30% of what a full position would be. And then once the stock is almost ready to exit that 5% buy zone, then buy the remaining, I guess it would be 20%. So that's a way to reduce your upside risk, or I mean your downside risk, while still participating in the breakout and making an impact on your portfolio. So should the stock act well. We'll be sending out a Q&A summary and the updated watch list and ready list. Thank you so much for all the great participation. We continue to grow our audience, so that means we're going to have some growing pains, but we hope you're really enjoying the show. We'll all be back on Friday, and have a great rest of the trading day. See you later. Bye-bye.